My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make you a little money. My job is not just to entertain, but to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. It happened again. A week I've been hearing that the bull is dead all week and that the bear is resurrected. Even on days that ultimately turned out like, well, this one, where the Dow gained 169 points. It was down, looking at it was going to be down 200 points down at 4 a.m. S&P advanced 0.22%. And the Nasdaq, okay, that didn't go right. That dipped 0.61%. Now, this kind of thinking is so wrong that I find it painful.
The house of pain.
You don't need to be as old as I am, and I just turned a year older, to recognize this. Right now, we're witnessing classic bull market behavior. A bull market has moments where the despair is thick, the short sellers get all shorted up, and the world looks like it's going to come crashing down on your head. That's what happened this week. And there will be more frightening moments like this as long as the bull reigns. So get used to it. It's part of the process. Why am I so confident the bull's alive and kicking? First, even on our worst days this year, we've had a huge number of securities that are actually up, not down. Good advance decline ratio. Second, we have no new supply in the form of IPOs or terrible SPACs, thank heavens. And the market tends to be surprisingly resilient, as long as we don't have a stock glut. Third, when it comes to the Fed's fight against inflation, we're clearly closer to the home stretch than the first turn. Fourth, even in the worst bear markets out there, let's say like an enterprise software torture chamber, well, things are finding their footing, and more on that later. With that in mind, what's the game plan for next week? Let's take a look. On Monday, we'll get another read on enterprise software when we see the reaction to a company called Monday.com, which is a workplace productivity software play, formerly a real hot one. Genuine high flyer. The stock's rocketed to 450 at the peak of the Nasdaq in late 2021, and then it plunged at 73 at its lows last year before rebounding to 131, where it is today. Unfortunately, Monday.com hasn't been able to turn a profit, or maybe they just haven't really tried. Lately, the market has blessed software companies that have pivoted to profitability. That's our term for it. Get used to it. But it has no faith in the ones that continue to pursue growth at all costs, including losses. If Monday.com makes the pivot, the stock bounces. Then I think also it can lead the whole group up or down. We also hear from a company called Treehouse Foods. Now, this is a company I've always admired because it has a stranglehold on the private label supermarket business. To date, we have not seen much trade down of any size at the supermarket into house brands. But once it starts happening, that will be a huge win in the fight against inflation because it's cheaper. Hey, speaking of inflation, Tuesday morning, very important, we get this most important piece of data this entire week. It's the Consumer Price Index, or CPI, in all of its various forms. A lot coming, there's X food and energy, all that kind of stuff. But we know there have been some big changes for the better in this time, a group that really hurt us. Apparel, which has gone up in cost rather remarkably given the apparel glut. I think that's going to change and head down. I think car prices might be a little better, but the relentless rise in the CPI ultimately feels unstoppable. So I don't want to get my hopes up too much. Of course, any good news from this number, any sign that inflation has peaked or is going down, disinflation, and this market is ready to roar. I meet a lot of people out there and talk stocks instantly and constantly. Invariably, if they're younger, they want to talk about Tesla, now Alphabet, of course, Apple. Older people, they want to talk about Verizon and Coca-Cola. Verizon's straightforward, very tough competitive business now. But Coke and its faster-growing doppelganger PepsiCo always get a positive nod from me. How can it not? CEO James Quincy has ignited the growth here, and I think he can deliver still one more good quarter. At the close, one of my faves, Airbnb reports. Now, I've been adamant that this company's undervalued, but I just don't know when it can break out to the upside. I am asking you to forgive a missed quarter. You may get one. Airbnb is busy eviscerating competition. Look, it worked with Uber. It obliterated Lyft. I think the Airbnb wants game, set, match for the new lodging world, and it's going to get it. I like gold very much, but I have been miffed about the action in my favorite, which is Barrick Gold. We'll hear from them Wednesday morning. This is the best gold miner on earth. Yet its stock trades as if Barrick was mining Bitcoin. Could this be the quarter where people realize that this stock deserves to trade much better than the underlying precious metal? I think it might. And by the way, it's got a very good and safe dividend. Next up, I hate almost every SPAC, as you know, except one. It's called Bolero. That's the company that's rolling up mom-and-pop bowling alleys, a sport I happen to love that's in desperate need of rationalization. I expect very good numbers. Will Shopify have its earnings breakout this quarter? Like Monday.com, which I talked about from Monday, Shopify needs to show that it too can pivot to profitability. It's no longer enough just to be the fulfillment company for the web, or at least the part of the web that's not dominated by Amazon. Thursday, we get results from a company called Constellation Energy that we have repeatedly featured on the show. I've been recommending this one ever since it was spun off by Exelon, giant utility company, because it's nearly all nuclear, and nuclear power is the most efficient way to decarbonize. Huge winner from the so-called Inflation Reduction Act, too. I'd stick with this one as long as the Democrats in the White House. After the close, we hear from a host of companies, including Applied Materials, the semiconductor capital equipment maker. Now, we had Secretary of Commerce Gina Raimondo on this week earlier, and she has been instrumental in creating legislation like the CHIPS Act that will help the U.S. regain its dominance in semiconductor manufacturing. I'm a big supporter of the CHIPS Act, as you know, but I warn you not to buy Applied Materials now off the legislation. It'll be years before it actually gets orders. In the interim, you have a lot of chip companies that are trying to hold back orders because semiconductor pricing is so bad. At the very least, wait until after AMAT reports, because I'm betting it might not be that good a quarter. 50 million people gamble in this country, and we could expect 15 billion to be bet on the big game this weekend. That will probably get people all bowled up about DraftKings, which also reports Thursday. I say be careful. Florida, Texas, and California still don't have legal gambling. And the numbers here won't be good enough, I think, until that changes. I do like DraftKings. I like the CEO, Jason Robbins. But I don't like the legislative roadmap. How about DoorDash? Any hope for it to be profitable? The shareholders better hope that you better hope they get it, or otherwise it's going to be painful. You know, this one has to get into the black right now because the market has no stomach for companies that don't seem to care about earnings. Sometimes I feel that that's the case with DoorDash. Finally, on Friday, we have two important companies, AutoNation and Deere. AutoNation gives us a read on the used car industry. I don't like this business right now, and not just because Carvana has been a huge disruptor. It even disrupted itself. But I dislike used cars simply because the prices have been coming down fairly consistently until they bounced in January. And it seems like a real spike. But that'd be a bummer, by the way, if you're worried at the Fed that might have to have more interest rate hikes just to cool that part of the economy. Now, look, let's listen to AutoNation. Let's not buy the stock. Stock's had a colossal move. No, thank you. Deere's different. I said this before, but I need you to know that we're in a very powerful ag bull market. It's the feed the world story. We don't have enough tractors out there, as AGCO told us earlier this week. Deere's the best way to play it because it's the most visible and best known. Bottom line, next week truly marks a breather to the earnings season as it winds down. That said, there's plenty to buy, as long as you buy companies that are making money and returning some of that money to shareholders via buybacks or dividends. Still too soon, by the way, to pick at high-growth stocks with little in the way of earnings, though, and there's certainly no need to speculate at all. Joshua in Florida. Joshua.
Hi, Jim.
Josh.
Jim, I'm a graduate student in the MS in Sustainable Business program at the University of Miami Herbert Business School. It was great to have you on campus last week.
Thank you. It was a lot of fun being there. Thank you for having me.
Yeah, go Canes. And Jim, what are your thoughts on the recent push towards ESG implementation and reporting? And do you feel it actually drives value for firms?
I think here's the way I feel about it. First of all, I'm very pro ESG. I don't even think it's controversial. I know some do. But I don't think it really matters that much. Some of the funds are big enough that they could move the needle, but I think we still pick stocks on the basis of the company's fundamentals, and we hope that they are embracing our ESG views. Let's go to Christopher in Michigan, please. Christopher.
Yeah, wow. Greetings from Trenton, Michigan. A beautiful downriver community. So, Jim, I'm wondering about something. You know, it's been going on for a few weeks here, but with the increased prominence of artificial intelligence in various industries, it's surprising that IBM Watson isn't frequently questioned or mentioned in these discussions. Can you shed some light on
Well,
why
it's
this
just
is.
unimportant. I mean, I hate to be just blunt about it, but it's unimportant. There are 3 companies that are doing fabulous work in AI. And right now, publicly, we know about Microsoft. We're still thinking that Google may not know what it's doing, but I think it will. And then only Meta. And we haven't seen what Meta's doing in AI, but my sources tell me it's going to be pretty blow away. Let's go to Mark in Iowa, please. Mark.
Hi, Jim. A Charter Club member here, and I want to wish
Excellent.
you a happy birthday.
Oh, thank you, Mark. Really appreciate it. And thank you for being a member of the club. How can I help?
Well, I bought a small lot of this club stock. Then the price increased, and I did not want to violate my average cost basis, just like you explained in the bulletin yesterday.
Absolutely. Absolutely.
Now that the price is back down to nearly my cost basis, I would like your opinion if the investing thesis is still good or has the business prospects deteriorated. The stock is ticker symbol PG, Procter & Gamble.
No deterioration whatsoever. As a matter of fact, I think it's just gotten better because they had to reprice a lot of plastic. I think it'll be terrific. This is a dividend aristocrat, and I think you want to hold on to that yield, reinvest it, and own that stock, and I think you'll be terrific. Just really clear sailing for multiple years. All right, next week truly marks a breather to earnings season as it winds down. That said, there's plenty to buy as long as you buy companies that are making money and returning some of that money in the form of shareholder buybacks or dividends. Oh, man, tonight, the enterprise software space spent 2022 in the doghouse, but 2023 has lit a fire in the group. I'm digging into a few reports that might be worth eyeing now that the tide seems to have turned. That even when the market's in the green, you have to prepare for whatever it can throw you, and that's why we play MI Diversified. We'll put your portfolio to the test. Finally, Dexcom soared today after earnings. I'm going to find out exactly why Wall Street loves the quarter. We'll talk to the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.